Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to make some and or a lot of money on the internet. Loaded up for discussion today, we have Pump Fun launching their DEX, taking on every other DEX on Solana, attracting all the activity to itself. We'll discuss that in a little bit. We've got Canary Capital filing the first ever ETF with an NFT component via the Pengu ETF. We'll get into those details in just a little bit and our takes on it. We've also got Telegram-focused Ton Foundation saying that VCs have bought over $400 million worth of Toncoin. We'll give you those details in a little bit, as well as the general price action on crypto and NFTs, plus a general discussion on market thoughts as usual. So stay tuned for that. I've got Legendary and Bread with me in the co-host seats. We're ready to get into it. But just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very risky, and therefore we don't know anything for sure. Please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Friday. Finally, it's the 21st of March. How are you doing? How are you feeling?
GM, doing quite well. I did a little something yesterday as a result of our show. And that little something was buying a first batch of Tesla stock. So let's see how that will age over the next year or so. I actually had this post up on X like for 5 minutes saying Howard Lutnick said to buy a Tesla stock, so I'm following his financial advice. But then I was like, nah, better to delete that, especially after I've seen a couple of reports. I didn't check if they're like true or not, but of some alleged French people, journalists, whatever, who wanted to travel into the US, and they were stopped from doing that after they had a couple more critical comments on social media regarding Trump and administration. So I was like, maybe I shouldn't post that Howard Lutnick is giving financial advice on whatever it was, CNN or CNBC, I don't know.
Reasonable take. Is that from one of his news appearances? Because I was actually watching the All In interview that they did with him. I think they only published it yesterday. They published a whole hour long with, is it Scott Bessent? Is it Bessent? And then they did a whole one with Lutnick as well. So I'm like halfway through that, was watching that before the show today. Where was the advice? Was it there or was it somewhere else?
No, it was on some sort of TV interview where they showed pictures of burning Teslas, et cetera, et cetera. And he was saying basically stock is so cheap, like this guy is building so much, massively undervalued, apparently also holding Tesla stock himself is what some of the reports did say. I'd be curious to know if you can even do that, just, from a legal standpoint, if that is the correct way to shill stocks on TV, but I have no idea.
I don't know. I do think they feel kind of obliged to, with Tesla in particular, because Elon is so involved and has been so helpful to them. I think they probably feel a little bit obliged, feel a bit bad for him in that, the stock is almost literally going up in fire at the moment. Although, as we've been speaking about, one of the reasons it's kind of got our attention is forget the cars for a second, which I still think are pretty cool. I think a lot of people think that the Optimus robot aspect of Tesla is just not being priced in at all. Is that what you're thinking was, Legendary, or are you still kind of bullish on the car side as well?
Nah, all I want is exposure to human robotics. And I told you that I watched this. Let me see if I can actually pull it up on screen real quick. I think I can. This Boston Dynamics video. There we go. Where you can see that this guy is getting super athletic, even being able, there you go, doing his little judo-like roll, the Boston Dynamics robot that I'm sharing on screen. It's getting pretty impressive, but obviously that's not a publicly traded company. And he's also going to do a little handstand, I think. So the movements, for those watching us on screen, are looking, there we go, this is the handstand, are looking pretty, and then flipping over, are looking pretty natural. And that's seriously impressive. And fortunately,
he's breakdancing.
Yeah.
This is a very agile robot. Arguably more agile. I mean, we said we need to get back in the gym, Legendary. Are you saying on a scale here, how is this robot more agile than you at the moment or less?
Definitely more agile than me, I have to admit.
All right. So most of that's like whatever. It's doing the same motions as us. Fine, cool, whatever, robot dude. You're catching up. Fine. But what scares me in that video is the move, the handstand move, because he's now doing the robot thing. I don't know if you guys saw it, but like he goes up into a handstand, he twists his hips totally around and then lands the other direction. That's a robot thing, right? Us humans, we can't twist our torso 180 degrees. So now we're starting to get in the realm of only robot movements, and that scares me. Doom is closer than we think, I think.
Sounds like a content creator platform, only bots, only robots.
Yeah, I didn't. My task. All right, so this is going to get kind of weird. My task for like maybe testnet launches today. Hooray, candles. But I had to test one of our applications for that, and like I have to. Only robot.
I'm wondering where this is going. I'm excited.
There's one of our apps is an AI like girlfriend platform, right? So it's like these people are AI companions, right? So it's not, it's like it's multimodal, so you can like call them, text them, do whatever. But I have to start testing this shit to make sure that stuff actually works. And that means like I have to have, my girl here while I'm generating an AI waifu, and then like it inherently is kind of like leaning into the sexual thing. So it's like I can do everything I can. Like, oh, it's a muscular girl doing whatever. And it's like, man, it's like I had to defend myself from making AI waifu this weekend or this past week. Yeah, so it's coming.
How is that explanation coming across that for research purposes, you need to test an AI waifu, which is also sexualized?
Yeah, man. We're still figuring that one out.
How does it go when you say, well, this is just the testnet version? It's going to get real. Like in a few.
Yeah. Just wait until it lives on chain. Not that she knows what that means, but
exactly. Interesting stuff. Yeah, it's funny how I think in general on the investing side, it does. I do feel like I'm in the mode now where new stuff's happening, and because we've been in this mode for a few years, it's like as soon as you see something cool, it's like, well, how do we invest? How do we invest? We'll see in the snapshot today. There's like this uranium. There's a uranium piece of news. It's like, how do we get exposure? Nuclear. How do we get exposure? Robots. How do we get exposure? I think it's reasonable. Is it reasonable to be thinking about these things because we're kind of in the arena?
I mean, the dream is in the future, like you get permissionless access to it, right? Like there's some form of stuff. So like outside like private companies that like do whatever. I listened to a podcast yesterday where they're talking about how like it's probably going to be tough to get a lot of these existing stocks to take their actual already deployed to the stock market, Coinbase, Tesla, whatever, to get that actually on chain. They're trying to do some of that. You're seeing it now, right? Coinbase is there, but they're saying the thing that we're probably going to see is the primary market come across where you have these small to medium companies start on chain, right? Where then it's no longer us having to go and try to pull in the assets from traditional markets. It's on chain becomes the market, right? It is the thing that then traditional people start doing the ETF style stuff where they're trying to get access to our assets by doing the traditional formation of, again, an ETF or whatever. So hopefully if the flow starts going in that direction, like shit gets crazy. But it's probably not for the foreseeable future.
Sounds pretty exciting though. Funky, your hand is raised. Welcome to the stage, my man. What is your thought here? We're kind of going off on a tangent. What kind of various things we can get investing in? What are your thoughts on this or anything else?
Just real quick question about Bread's waifu. Is her name Samantha by any chance? Because I can't help but think that the movie Her is actually set in 2025. So it's kind of scary to think about how quick all this stuff is coming, right? With AI waifus and whatnot.
Yeah, so I did everything I could to make it like normal, quote unquote. Literally, like personality is normal, face is normal. I literally wrote normal in all the descriptions, and it still spit out this like pinup girl like flexy thing. I guess, yeah. I don't even remember what the name was. I think it's I don't know. It was like anime, something. I'll see if I can find it.
It's going to be a recurring storyline now. Brad.
I mean, quick comment on that actually, because it happened just a week ago in the Netherlands. There is a guy who got married to an AI chatbot in the Netherlands, and the Dutch Data Protection Authority had to comment on that, and they were basically That's like a legit commentary by the official, data protection agency talking about the risks of having an AI as a romantic partner.
Official report required for the government. Interesting. Bullish on AI moving forward, wondering how we can invest in that as well. Maybe that's something to consider. Look, we got to get into it. We got to slightly...
Sorry, the YouTube comment, someone saying, Marco Polo is saying, imagine your married chatbot taking half of your crypto in the event of a divorce.
I mean, they would definitely know where it is as well. They would definitely know where it is. Talking of crypto, let's get into it, starting with the price action. As usual, what you need to hide from your future AI spouses. Bitcoin is down 1% to 84K. We've got ETH down 1% at 1.9. XRP is down almost 4% to 2.4. Solana is down 3% as well to $126. On the meme coin side of things, we have Doge down a couple of percent to 16. Pepe is down a couple of percent too. Chump's down 5% to 10 cents. Whiff is one of the only ones that's kind of stationary. Bonk is stationary as well. Pengu's down 10% on the news of the Pengu ETF. That's a bit of a shame, but we'll get into some of the bigger details there, along with the NFT price action. We have Fartcoin down 5%, although that's up 36% on the week. So that went up quite a lot the other day. And we have any other relevant ones. MOG is down 5%. That's been down for a long time now. I think that's probably AIXBT is down a few percent as well. So mostly down today, I'd say, on the meme coin side of things. In terms of the main headlines, we've got Pump Fund launching its DEX. That's been disastrous for other DEXs on Solana. Radium has really suffered as a consequence. So we're going to dive into that in a bit. We've got Canary Capital filing the first ever ETF with an NFT component via the Pengu ETF. NFTs did pump briefly and then kind of settled back down to where they were. I think the Pengu token itself is the one that suffered the most out of that news, whereas the NFTs in general, actually, in this whole downturn, have held relatively strong. Telegram-focused Ton Foundation says VCs have bought over $400 million worth of Toncoin. We'll get into the information you need to know on that. Legendary, is there anything on the NFT side that we need to know?
There's actually just one thing to really comment on, and that's the Good Vibes Club, which has seen its first major correction yesterday, down more than 30%, down 31%, at a 0.28 ETH floor. But with that being said, the volume of the collection is still pretty strong, still 126 ETH in 24-hour volumes, which is translating to a total of 260 sales. But it is the first setback in the collection's floor price, so I thought it's worthwhile mentioning that.
Fair enough. Well, there's always high volume when lots of people selling. So
Absolutely.
that is, so I guess the team will still be making their money there and hopefully getting some good runway to continue building out. Getting into the rest of the Web3 roundup, we've got a bunch of interesting pieces here. Metaplanet, Japan's biggest corporate Bitcoin holder, adds Eric Trump as an advisor. I think a few people were asking questions about what is going on there. But he's been added to the strategic board of advisors to boost Bitcoin adoption. Its total stablecoin market cap has surged past all-time high of $230 billion. Had the Walrus Foundation securing $140 billion in fundraising led by Standard Crypto, as well as participation from A16Z, Electra Capital, and a few other prominent VCs. You had Solana DEX Orca up 100% after its upbit listing. I think it was actually more than that in the end. You have Mintify announcing AI-powered trading of on-chain assets. It sounds pretty cool. The founder tweeted, this was Evan, who said, excited to unveil Mint AI. Soon you'll be able to trade on-chain assets effortlessly with simple prompts, uncover hidden gems through a personalized discovery feed. I think that's pretty cool. Obviously, people are exploring AI stuff with trading kind of tokens, maybe generating yield and saying, go and park my stablecoin somewhere. I haven't really heard that for other digital assets. So I wonder if NFTs will be included there. DeFi Dungeons pre-sale hit $130 million yesterday, committed for their game token 24 hours. So it seemed like people were willing to, some risk was ready to be put back on yesterday. And then the thing I mentioned at the top of the show, Uranium Digital announced a $6.1 million seed round to accelerate the creation of new market for nuclear energy. I'm super interested in that. The thesis for that, which was shared by one of the investors was that this is like a huge market. It's just not a good way for people to get access to it at the moment. So they want to create a new market for the future of nuclear energy and the modernization of its fuel cycle trading infrastructure. Interesting stuff. That is the WebD Roundup. Legendary. Before we get into the main stuff today, and we're going to have to go a little bit speedier. Remember, we've got the interview with our partners, Zero G Labs, who are seeking to build the largest L1 for AI a little bit later in the show today. So that's coming up. Looking forward to have that conversation. But before we get there, Ledge, what's anything catching your attention here? I've got one thing to bring up in particular.
Yeah, there's two things. I mean, you can probably guess that I really find the uranium digital news pretty interesting. This is the protocol I think that we had mentioned a while ago, and seeing that there's a couple of assets that are typically a bit harder to trade coming on chain is something that I find interesting. It's actually something that I want to trade myself as well. And then on the other hand, also just Stefano Ovarch mentioned it in the YouTube comments, so I do think we have to bring it up real quick, is Zach XPT's post, the thread on the hyperliquid whale. Zach XPT once again did amazing work in identifying the guy. I think even found his Duolingo account as a part of his research, and it did turn out that this has been someone who's been engaged in illicit activities. Years ago, was arrested for stealing $1 million from 2 casinos in 2023.
You want to share this, Ledge? Have you got it on the screen?
I'm gonna bring it up. Oopsie, there we go. Gonna bring it up on screen. So this William Parker person was also known as Alistair Packover before changing his name. Also made headlines in the UK in the 2010s for fraud charges related to both hacking and gambling. And again, got arrested in 2023 again, and apparently is now using, or has been using, some of these funds to gamble on Hyperliquid as well. So amazing research, very interesting thread, very interesting breakdown by Zach XPT.
That's
the
nuts.
depth of his resources is insane. Like, because he goes into it a little bit there, and just like the power in what he does is not because he's like any good at one thing. It's that he's got like this incredible tool belt of stuff that he, when combined, like in one stage of this, he goes in and says like, he like has a resource for, oh, I got this guy's phone number, and then I have contacts at this other place, and then I get their like the phone number dug back into the actual like, you know, the registry for it. And then like, oh, because I have that, like he's talking about going in to get their Duolingo because I have access to the people who have access to the registry that's tied to the number. And then like, it's just, he's got to contact at all of these various disparate things that in isolation are probably not, like anyone can go cold, but he has the ability to get through the next thing every single time. And that's why, like, in aggregate, his entire reports are crazy.
Yeah, you can see parts of that here where he talks exactly about the phone number, and then he finds the PayPal, the Duolingo, the chess.com, the Medium account, the Adobe account, the Zapier account, everything related to that as well.
Damn. It's pretty impressive. It just reminds me, it's kind of tangential, but it reminds me of, I was listening to a podcast 2 days ago on Larry Gagosian, who's obviously this huge art dealer now, probably the biggest in the world. And they talked about his network as being one of the reasons why he became so successful. So when he had all these, he worked for some previously really well-connected people who had like placed a lot of high value art with people. And that industry is famously opaque, right? You don't even know where the work is. Like, people don't know who's sold to who. No one knows where it is. So one of the reasons for its success was that he built up this network over time of knowing every single like famous piece of work. He would just know who had it, who sold it to who, and then he became the person that was selling it from one person to another. There's actually this story where he sold a piece from one person to another person on a Wednesday, and then by Friday he'd sold it to a person beyond, he'd sold it to the next person before the people he sold it to on Wednesday had even taken custody. And each time on each sale, he's taking 30%. So 30% was the number that he would get on each commission. But the point being,
finder's fee.
Yeah, but the point being, without that like specific network, and he basically like built this map of the world and all the great pieces. And in aggregate, in isolation, it means nothing. but together it becomes like this super powerful thing.
Now let me extend that to the crypto market and give some advice to people in the audience and listening on YouTube and wherever else you are, right? Like this is something that it's always been hard for us, like being transparent, us to even price, right? Like there is value in the network that you have built up through credibility, connections, like, you know, common interactions, like you accumulate friends and confidants, acquaintances throughout all this stuff. And it's hard to price that, but there is value in that. And I think that's a great example of it. But you see it in other things, right? Like because you know, you want to say your Twitter profile, all this stuff, right? People that follow you back because of something you did 6 months ago, a year ago, 2 years ago. Like there is value in that, right? And if you know those people, if you have a mental model of the person that would be good for X for any other person, it would behoove you guys to recognize that and try to do your best to leverage it.
I agree. Great advice, I think. Okay, we've got a bunch of stuff to get into. Let's get straight into it then, Brad. The first headline for today is Punt Fund launching a DEX. What do we need to know here? Is it over for the rest of these Solana applications as Punt Fund wants to take it all?
Yeah, it's going to be tough because they own the user. So what it is Pump Fund announced yesterday that they are launching a DEX of their own. Pump Swap specifically is the name for it. It's going to have instant migrations, 0 migration fees, down from 6 of the previous one, because again they were using Radium previously. So Pump would launch a coin, you trade it locally, and then eventually it would migrate to Radium. That's why the Ray token was pumping. That's why everyone was kind of bullish on them for a while. And actually counter to this, Radium is also launching their own launcher, right? So now you have both of these people that have verticalized the stack to try to acquire 100% of the fees the other person was, the other company was. So this was natural. It's a progression of any successful application, frankly. But anyways, instant migration, 0 migration fees, down from 6 SOL. More liquidity, and they're doing a creator revenue sharing in the future, where a portion of the actual fees that are acquired from trading on the DEX will go to creators. Now they have a breakdown of the fees as they are set today, and it's roughly 0.25% fee on all swaps on the DEX, and 0.2% of that goes to the actual pool, the pool itself, the LP, and then 0.05% goes back to Pump Swap or Pump themselves. Now there are like to understand the model of Pump previously, if you guys aren't familiar, Pump actually made money whenever you were trading on the bonding curve that it had before the coin actually migrated to the pool. Now, as a business, they are trading on, like they're capturing the fees on the bonding curve. And then now once it migrates to the actual DEX, where it's an open permissionless thing, it's got a liquidity pool, that they're now capturing fees over there as well. So like they're just verticalizing the stack of what was value leakage, because there's been millions and millions and millions of dollars that have been earned to Radium because that's where they sent their coins, but now they earn that. Another few other notes, just the DEX itself is similar to Radium V4, Uniswap V2, in that it's a constant product AMM. So it's fairly standard for the industry. They're doing a $2 million prize pool for auditing the smart contracts to make sure that people try to find exploits before they actually go live with it, or not go live with it, but 2 million just to make sure people find exploits. And then there are a list of, as part of their initial campaign, of tokens that are migrating to Solana to be traded for the first time, in order to like seed some initial interest. So some notable ones in there, like say Jupiter's in there, Coinbase, the CBBTC is on there, Tron, Aptos, Pengu's there, Frax. So a lot of interesting ones. And then last and final note was I saw Athena actually dropped an announcement that they are going to be a core pair asset on the Pump Swap DEX. So the USDE can be used natively. One final note is the next speculation from this is everyone goes, "Oh my God, Pump Chain is next."
Exactly what I was about to ask. Where does this go?
Yeah, so everyone sees this and they go, "Oh my God, Pump Chain's coming," which probably, at some point, because eventually you crush your immediate domain, and then eventually you want to capture even more revenue. So right now, the next thing that it's leaking revenue to would be, the chain itself and paying fees. Like whenever like someone tries to do a priority swap, they have to pay to the validators, all that stuff. So the thought would be like, oh, well, let's just do pump chain because then we can capture that little bit of fees. There's some headwinds with that. I'm not necessarily sold that they will do it because they kind of do require a little bit of like community composability, a lot of like interactivity with the rest of the network. Jupiter, they get a lot of love from Jupiter because Jupiter is a good aggregator. People are going to go there to trade stuff, even if it's on whichever pool. It doesn't matter, right? That's why they like Jupiter, is because it doesn't matter which DEX it's on. And we've seen Unichain, right? Unichain is deployed. It's got like $10 million in total TVL, right? Like the people don't go there just to swap coins. You go there for a bunch of reasons, and then because you're there, you swap coins. So I don't necessarily believe that there will be a pump chain. It wouldn't surprise me, but that's the logical next step.
Interesting. Okay. And one other final thing I thought was kind of interesting. I don't think this has been done before. Creator revenue sharing. I don't know if anyone's necessarily incentivized that beforehand. Do you think that's an attempt to have coin creators stop dumping all their tokens on everyone?
Yeah, it's
Maybe
kind of
they would be
funny.
more incentivized to like, no, make it be better. It's hard because the incentives are so skewed towards just getting rid of this stuff, right?
Yeah, like one, like the incentive is the creator should have a shit ton of coins already. So like the incentives are already there. What this incentivizes, and it's something similar to what we saw with the Friendtech stuff, right? If you're getting it on swap fees, you're incentivizing volatility, not price go up. So it's not necessarily aligned incentives. They didn't have a ton of mechanisms to work with, so it's not like they can just like create something that's perfect. But yeah, it's just it'll be interesting. I think it's negligible. I don't think it'll have any impact.
Okay. Yeah. As we often think, it's just like figuring out the incentives will probably just will illuminate what direction it goes in. And at the moment, as things stand, the incentive is to have a bunch of your own tokens and probably sell them as the price goes up, but get the revenue share over a period of time. Ledger, any thoughts on? Go on, Brad.
So you're technically double dipping, right? If I have a shit on my coins and I know I'm earning on fees, I can hold on to it while it goes up, scare everyone with a quick sale, and then on the sale, scare people, which increases volatility, which makes me earn more. And then like, oh, well, now I can buy more. And then I buy some more, which gives people confidence, which shoots the price back up, which then gives me a little bit more fees because I get 0.5% on that. So it's like, yeah, I don't know that it's necessarily aligned.
It's kind of like royalties for NFTs, right? Where people
Exactly.
Sometimes teams make huge monies going up, which people think is good, but then they also absolutely print as the price is going down. So interesting points. Ledge, anything to come in on here? Any thoughts?
Yes, sir. 2 comments on that. A, shout out to Just Stefan in the YouTube comments making the point, if we ever launch Pump Chain, people can't take crypto seriously with names like that. If we have a chain called Pump Chain. More serious comment on the stuff that Brett was saying regarding Athena, though. It's super interesting. If you read into their announcement, they're saying as the altcoin market transition from BTC pairings to USD, we expect meme coins will eventually follow the same path, with Athena playing a key role. So they do want to see meme coins being denominated against USDE and not against Solana or not against whatever other token they're trading. Which then kind of begs the question, if Athena on the one hand is positioning themselves as being this like onboarding infrastructure for TradFi institutional capital on the one hand, and that's the stablecoin infrastructure that the likes of BlackRock and others will be using. And then on the other hand, they are also the asset against which your next 10K shitter is denominated against. It's a very interesting balance to maintain if you want to play in both like the extremely degen arena and become the denominating stablecoin for meme coins that are traded on the pump DEX. And you also want to have the stablecoin infrastructure for the opposite end of the spectrum, the TradFi and institutional capital.
I think Guy is just smart as F. Like the dude, like the creator of Athena, like you hear him talk about a lot of stuff. I think he just knows like, and this is where I have tried to talk about recently, where I think the medium of exchange element of the moneyness is where a lot of things get its value. And he's trying to seed himself as the medium of exchange asset in a lot of asset creation areas, right? Whether it's on their own chain or now in pump. I just think it's he's smart to just inject himself there.
Yeah, I think it's a good point to bring up. My thought on that is, this is what I would say. In a way, I take your point, but we wouldn't say the same thing, because if you think about what their intention is, and I hold no ENA at the moment, so I'm similar to Overarch in the comments at the moment, saying been debating taking a big ENA position, but their unlocks and token drops are always sold. So it's like I'm trying to figure out the token position. Like I would love to get exposure, but I'm still quite bullish on the team, at least, and what their vision is. If their intention is to become money, like we wouldn't say, oh, US Circle at USDC or are trying to play in both sides, right? They're just trying to become completely ubiquitous. Yes, we're not exactly a stable coin, but we are, we are a synthetic dollar that can be used for whatever it might be that you need. Yes, we've got these institutional connections, but we are basically just money, and you can use us throughout the economy in whatever direction. So I
would typically agree, but the pushback on that would be to say that exactly this is the criticism that's has been constantly going around. And yes, it's gotten weaker. That all of crypto is used to money laundering, illicit, weird activities, rug pulls, and scams. And then if you're like more conservative institution, you would probably have the same concerns. And like, oh wait, you are also the guys doing that weird meme coin stuff as well, and not only our side of the business. This is where I still think there's like a bit of a issue, or a bit of a challenge to solve with that narrative.
Yeah, okay. I see what you mean. There. That's a fair point. Funky, you got something to come in on this before we head into the next headline?
Yeah, just real quick. I mean, I totally agree with Brett. I met Guy at DOS just a few days back. I watched him speak on a panel, and really, that does kind of surprise me, considering what he's talking about on the panel was sort of just making the Converge chain all about luring in the big TradFi players to kind of use that as the place to do a lot of their trading and stuff like that. So it was interesting just hearing all this back and forth. But yes, I completely concur with Guy. He struck me as super, super smart, and I chatted with him for a couple minutes after he was done on the panel.
Good stuff. Reporter on the ground, Funky coming in strong. Appreciate it, man. Look, we've got about 7 to 10 minutes before we get into our big interview for the day. We're speaking with Michael, CEO of Zero G Labs, in just a little bit. 2 headlines to still get through. Let's get into this Canary Capital Pengu ETF one. There's a lot of excitement on the timeline about this one. This is the news that Canary Capital have filed for a very unique, first of its kind hybrid NFT and meme coin ETF with the Pudgy Penguin NFT and token Pengu included. It's important because I think it's the first example where NFTs have been included in this type of a filing, and the first time a huge Web3 brand has managed to demand this type of exposure. In terms of the specific details, they said in seeking to achieve this investment objective, the trust will invest in a portfolio consisting primarily of Pengu, the official token of the Pudgy Penguins project, and secondly, Pudgy Penguins non-fungible token, so the NFTs. And the trust will also hold other digital assets like ETH and Sol, but only to the extent that they're necessary or incidental to the purchase of Pengu and the NFTs. Crucially, the crucial detail, which I'm not sure was even in this headline article that we're sharing on the screen, but it's important to know, is that the specific amounts, or the ratio between Pengu tokens to NFTs, is 80 to 95% Pengu tokens and 5 to 15% Pudgy Penguin NFTs. So I think this is pretty historic in some sense. Awesome news for the Pudgy Penguins team and Web3 more broadly. It's also, I think it's pretty gratifying to see teams that do ship things keep pushing forward. And no, I don't think that necessarily means that it's immediately a hit with loads of demand and that things just all kind of fall into place. But I think they deserve to be in the arena. They've shipped so much when it comes to real world stuff that it's nice to see them be in the conversation and push things forward. Now, the next challenge will be obviously to compete with all the other ETFs that we're seeing. We've obviously got the King ETF Bitcoin, which is everyone is just starting to wake up to and starting to allocate to, and has done extraordinarily well. But we are obviously seeing a whole host of other ETFs going through, and that trend is definitely going to continue. So a lot of competition, but I think it's pretty cool to see that come through. Ledge, any thoughts here on this? What are your thoughts? What are your thoughts on the proportion as well?
Yeah, honestly, ICO Beast had a pretty spicy take on that. I'm gonna bring it up on screen real quick. ICO said I really don't think it should be a hot take that a Pengu ETF is quite possibly the dumbest fucking thing I've seen in a while. We don't need ETFs for ghost change, much less sub 6-month-old meme coins. If the boomers are barely interested in buying ETH, much less Sol, why in the world would they even consider touching something called Pengu? I tend to agree, honestly, as a bullish on Pengu, bullish on the ecosystem that Luca is building. And yes, it's cool to kind of prove the concept theoretically that you can push for a meme coin plus NFTs to be listed as an ETF, but you truly don't need that. And a few people are making the point that Pudgy Penguin's not an NFT project. They have retail stores selling the toy lines, etc., etc., etc. ICOB said, yeah, so does KFC, but they don't have an ETF. And also, I don't think this translation works. Like, if anything, and I said that in a post myself, I'd rather own Pudgy Penguin stock if that were a publicly traded company at some point in the future when they're big enough. But I don't see this translation working, that someone buys Pudgy Penguin plushies, toys, and is like, oh, there's also a Pengu ETF. I might buy that as well. So, no shade thrown. And I think it's cool to prove the concept that you can have this as a financial asset. But I don't really think it's necessary to have a Pengu plus NFT ETF.
Fair enough. I think that's definitely one side of things. Funky, your hand is raised. We've got to keep it moving quickly here. What's your hot take here?
I just don't think that these things are going to come. We're going to see a lot more of these ETFs because it's probably done the same way that Rex Shares did the Move ETF. You just throw in a filing. The SEC is probably not going to be taking time to look through a lot of these things, and it's just on a clock. So my guess is this was put on the clock months ago, shortly after the Pengu release, and then it just ticks over. And if they don't get the stop order from the SEC to actually have them examine these things, it basically just gets listed. I think we're going to continue to see a rash of these kinds of ETFs pop up.
I definitely agree with that. There's going to be a hell of a lot of competition amongst them to, compete with what is probably not a huge amount of capital that's wanting to get into digital assets yet. And if they do want to, or as they're learning more, it's probably going to get directed to Bitcoin, right? At least as the first hurdle that people need to get through. Having said that, I think my thought still stands, which is, we want to keep pushing the space forward. And I think I don't mind that it's there. I think it's cool that aiming high, man. Just aiming high, absolutely going for it. Yes, I think it's going to be really challenging, and it's kind of like the thing where people do airdrops and people wonder, like, is this worth doing? I think it's a door that is now open that was not open before. It's an opportunity to win demand. And so that's my optimistic perspective. It's like, yeah, sure, we can just say that there isn't the demand now. I think that's probably true, but it's an opportunity to win demand, and let's see how they go. Good stuff. I take the kind of pushback on that as well, though. Final headline for the day, Ledge. We've got Telegram focused Ton Foundation selling two VCs, a lot of Tom. We've seen this a bunch of times recently, right? We sort of spoke about Athena selling like a ton of OTC tokens, kind of resetting the raise amount in the sense, because it means that everyone's cost basis is much higher, all the people who are holding. What do we need to know here? Why is this important?
It's actually a massive, massive headline that I think has been under the radar for many people. There's a group of VCs that includes Sequoia Capital, Ribbit, which recently invested in Privy, Benchmark, Kingsway, buying more than $400 million worth of Ton, the cryptocurrency of the Telegram app. And as you have said, they have been buying that from the foundation. Now, what we don't know is the exact terms and structure of the deal. We don't know if that was discounted or to what level this was discounted. However, what we do know is that the Telegram user numbers have been growing massively. Telegram has recently surpassed 1 billion users worldwide. That is for monthly active users, around 450 million, about 450 million daily active users, 10 million being subscribers to Telegram Premium. Not necessarily the most popular app in the US, with only 9% of the American population using that, but 45%, for example, of the Indian population using it. Just to add a couple more stats, because I think they're interesting. Half of that Telegram users are between 25 and 44 years old, so it kind of seems to also fit well with the core group of crypto users, and they do make money not only on the subscriptions. There is a lot of activity going on the token side of things as well, with 120 million unique holders of Toncoin, with 40 million blockchain users. And I feel like I was honestly surprised to learn that, because on Telegram you have the subscription, you have the Telegram gifts, which are rings, stickers, teddy bears, like that drop sometimes in limited quantities, which you can buy and obviously keep to yourself or gift to others using in-app purchases. And I did not know that, hence I'm glad that Whale had a thread on that the Telegram NFT gifts are actually basically ton NFTs. And they are seeing quite a lot of economic activity on that. Most of them do cost anywhere between $2 and $50. And I've also recently seen a purchase by Pavel Durov, the Telegram founder, purchasing the most coveted one, the golden plush Pepe, for 13,000 US dollars a couple days ago. And they are doing $500,000 in daily volume on that, with 67,000 wallets who have traded gifts between their Telegram accounts so far. So it's interesting to see that this is basically, I think, one of the more interesting examples for like blockchain technology that you don't really know that it's happening in the background while you're using the app. Because me as a Web3 native, I did not know that. And then I can see why you have Kingsway, Sequoia Capital, and some others coming in and purchasing a very, very large amount of the Ton token. But again, it would be also interesting to know more of the terms of those deals with the foundation.
The thing that's interesting with this, like, I was having this debate with Naveen, who's one of the founders of Tari, which is a privacy proof of work blockchain. And it's like, always a conversation around distribution and like who owns the user and where the power is with that. It's kind of similar to what Pump was just doing, right? Pump owns the user relationship because of a lot of the coin launches and stuff, which means they have the power to launch a DEX and then maintain, drive fees, like, verticalize. The same argument was made early on for Ton blockchain, because it's like, well, Telegram is massively distributed, right? Like, it's got a shit ton of users. And if you can just tack on things after the fact, like a blockchain, a full-on blockchain, this is their second attempt at it, you can potentially utilize it in ways that are valuable, useful, and can drive a lot of revenue. Now, the counter to that is that I think pretty universally everyone said Ton blockchain's dog shit. Frankly, like, it's just the coding languages it actually uses is very opaque and different, right? So it's hard to bring on developers. It's not very intuitive. It's not very performant, right? It's just got a lot of things going for it that just aren't awesome. And yet you see some of this stuff actually having success, like changing Telegram names, like actually selling that stuff. Like, that's something that's very obvious to us as a use case that like is meaningful and we think would be useful, that people are selling them for hundreds of thousands of dollars. My question is, I don't know if I noticed the stars thing previously, and I thought that was a good way for a blockchain or a token forward company to issue or have tokens to be sold without actually having to sell them, right? So you buy these stars, which are just like in-game currencies. They can actually keep their Telegram app inside of the app stores, right, without losing a fee, or they can actually just pay their fee. But they can bypass a lot of the concerns that typically don't let apps go into the app store. And then on the back end, you do the conversion to Toncoin, and then like you buy, sell, and have some speculation there. I don't know. Do you need a KYC to buy those stars on the front end? Because that was
Kind of.
Or
if you buy, I did buy stars before. So obviously, if you buy in the Play Store or in the App Store, you will have some sort of credit card or other like means of purchase. And to use the app or Play Store, you need to KYC previously. So if you go via the mobile app, you will be quote unquote soft KYC'd with either Android or Apple, but you don't have to KYC specifically within the Telegram ecosystem, neither on the app side nor on the blockchain side.
Interesting stuff. Good to dive into the Telegram ecosystem. We don't spend. We always know that it's relevant, and the numbers are extraordinary. Like, the numbers are absolutely extraordinary coming out of that ecosystem. So good to touch in there. Guys, want to keep it moving now. Delighted to welcome to the stage our partners at 0G, Michael Welcome to the stage with us. Great to have you on the show. I know you've been flying around like crazy at the moment around the world. Where have you been recently? Where are you now?
Yeah, it's been a little bit intense. I've been to probably 8 countries over the last few weeks. So it's been super fun. But right now I'm in New York for DAS. I took in the red eye yesterday, so running on 4 hours of sleep or so, but it's exciting.
I think in the same time that we organized the interview, I've been like, the time zone thing has been doing my head in, because like the daylight savings has been going, but in that same period of time, I think you've been in 3 completely different time zones. So it's just been like very difficult to sort it out. But yeah, you're on the move, obviously, because Zero G has a lot going on at the moment. I just want to introduce you properly, get people up to speed with what you guys are building, because it's pretty interesting, and then really excited to get into this conversation. So obviously, Michael is the founder of Zero G, who is seeking to build the largest L1 blockchain for AI. We're going to talk about what that means a little bit. Before Zero G, Michael worked as a consultant at Bain and at Bridgewater during the financial crisis, and built a startup which went from 300K ARR in its first year to 100 mil in 4 years. After the business went through significant upheaval during COVID, Michael met his technologist co-founders, who were the founders of China's largest and only regulatory compliant L1. And after some back and forth, they decided to build Zero G together. Interested to dive in there. They raised $35 million pre-seed from top investors like Alliance, Animoca, Delphi, Stanford Builders Fund, and a couple of others. And in this conversation, we're going to be focusing on Michael's journey towards Zero G, the vision behind Zero G and its product, and how Michael thinks about building the largest blockchain for AI and what that means. So, Michael, as I said, welcome to the show. Maybe let's start back at the beginning of Zero G. So you met your co-founders, and one of the first things I've read when I was looking into that was they were the founders of China's largest and only regulatory compliant L1 called Conflux. So how did this happen? How did that relationship start? What made you decide that these were the group of people that you wanted to build Zero G with?
Yeah, one day, essentially, my classmate from Stanford, Thomas Yao, reached out to me. And we've done a number of kind of deals together in the blockchain space. We've learned about Bitcoin together. We listened to Mark Andreessen before, and I was a DFJ fellow. We listened to Tim Draper before. Some of our classmates also were talking about Bitcoin at the time. And essentially, we were getting the message, hey, we need to really check this thing out. This was like 2013, 2014 kind of time zone. We bought some Bitcoin together. And then later on, we participated in ICOs, kind of 2016, 17. Thomas's fund was also very early into Ethereum and MetaMask and so on. So we've kind of approached it from an investment standpoint before. And when he reached out to me, he essentially said that 5 years ago, and this was late 2022, 5 years ago, I invested in this company called Conflux. Ming and Fan, 2 of the co-founders, are some of the best engineers and computer scientists I've ever backed. I'd like you to meet them. They want to start something more global scale. And so that was literally the premise. And we got together, and after 6 months of co-founder dating, I came to the same conclusion. I don't even care what we start. We just have to start something. So it really started with the team. Ming, for example, spent 11 years at Microsoft Research, wrote some of the key research around distributed storage, distributed compute, wrote some of the first AI algorithms for Microsoft Bing as well. Fan was his intern initially, but is a 2-time Olympic gold medalist in informatics. MIT computer science PhD, University of Toronto professor as well. And then they started Conflux together.
Wow, that's an extraordinary set of, I think, achievements. Just a quick one before we get into more of the details. When you talk about co-founder dating, I definitely resonate from a business perspective. Legendary is the person I've been co-founder dating for the longest. Brett has come in a little bit later. What's like when you're starting things out, because I think we've got a lot of entrepreneurial people in the audience as well. When you're starting things out from a business perspective, and I know you've done other businesses before as well, right? You ran a startup called Garten, your first client was
Right.
Apple, I believe, from the stuff that I did, and you had like extraordinary success before COVID kind of made things a bit difficult. How are you trying to set up that company with the people around you in order to be successful?
Yeah, for Gartner was very interesting because I started it while I was in graduate school, essentially. So I took a class called the Lean Launchpad, and that was taught by Steve Blank. I don't know if you know Steve Blank, but he's kind of the father of the lean startup movement. So if you heard of things like MVP, customer development, get outside of the building, so he's really behind a lot of that. And so he became a mentor to me. And his first thing is basically, there's nothing you can do inside the building. Like nobody's going to figure out, or you're not going to discover customer needs by being inside the building. So get outside the building, talk to actual customers, figure out what they want, and then build a business model that's viable around that. And so that was the mentality that I approached things with. And then the next thing he said is, well, once you figure out a need, then you have to figure out how to scale it. Like, who do you know in a particular company, if it's B2B, is the buyer? Who's the user? Who's the economic decision maker? Who's the saboteur? Who's the influencer? And different company decisions. And so he was very systematic. And so that was the type of mindset I took to building Garten before. And it was quite fun. During the class, we actually started producing revenue because we started seeing that there was something that customers really needed. We started out, so it was a B2B well-being company, and we started out with kind of nutrition needs. And so just with the thing that was the most processed that we take into our bodies generally, which is snacks. And we, within 2 weeks, put up an e-commerce site just to test a bunch of things out. And then about a month into the class, the first order from Apple came in. And it had like an at apple.com email associated with it. I'm like, oh, really? Did Apple just buy something from us? And then I started like LinkedIn stalking this person. And it's like, whoa, this is a real person. And she works with like the VP of design at Apple. This is so cool. And then basically like hand delivered stuff and just asked her a bunch of questions around why did you do it and so on. And then, you know, just took off from there. But that first order is just like, I don't know, mind blowing. It's just so
I'm
much
so
fun.
bullish on that interaction that you just had, right? Like whenever someone does something that is shows that they latched on, right? Whether it's like on to something that you wrote or something that you're doing, something that you're building, and you get immediate feedback from like, what resonated with you? Like because I know from your side, you're like, I'm just trying shit. Like I'm doing something I think is right. I'm not sure what's resonating, and then it hits with someone. And you're like, all right, I need to distill whatever they saw into like a repeatable, scalable thing. And then that's kind of where something can come from. So yeah, you need to have that intuition to seek out that feedback from those initial people to really curate stuff.
And do you remember what she said? What clicked with her to make the order with you guys?
Yeah, what clicked was that essentially we curated an experience where she didn't need to think about it. Because if she goes to other places, she's like, well, I don't know what's healthy. I don't know, what to order. I don't know if my team's going to like it. And the way we approached it is basically like, we're going to take away all the nutrition pieces for you. We will do that. And then we will also do a bunch of the taste testing so that you have a great product in front of you. And so we had maybe 30 different products on the site at the time that they were all, taste tested, which is a really tough job. Just kidding. And it was just a very easy experience. And so that's what she really enjoyed about that experience. And we just kept building on top of that. And then eventually we discovered that it wasn't just kind of the snack pieces, but it was overall nutrition. And then we built this a service around that scaled. And then beyond nutrition, we figured out that it's actually billing is a big issue, because usually people just get a bunch of Excel sheets and they're like, wait, did I really spend $10,000 on gum? This doesn't seem right. Like my entire bill is $50,000, but $10,000 is going to come. Something is not right here. And so we built a SaaS platform for that. And then it just kind of went like this. And we just built more and more and more services. So it really became a one-stop shop experience for all well-being within an office.
That's incredible. One thing that you mentioned for one of maybe the professor said is you can't figure out stuff inside, you got to go outside. I don't know if this is the right comparison, but I think, is there any comparison there with when people are building in like one region and then trying to go outside? Because I know, for example, I was speaking to Legendary before this actually, and we noticed that a lot of the zero G traction, for example, we're maybe in the Western bubble, a lot of it is out in the East. And as you said, your co-founders are the founders of China's largest compliant L1, or that's what they were involved in. How do you see these two hemispheres? To what extent are you trying to be big in both? Do you feel like you need to specialize? How do you attack both angles, or are you just going for all of it in one go?
Yeah, when I was running Garten, the answer was very different versus today. So at Garten, the way we looked at it is we just wanted to know everything about one segment so that we could scale very, very rapidly in that segment. So it was literally very closely defined, 50 to 250 employee companies that are tech focused in the Bay Area. It's super
very,
narrow.
very specific, yeah.
Yeah, because I just wanted to know everything about their customer type, because they were eventually paying for our service. And so scaling was much, much easier because they had a certain specific set of needs that we could then meet both on the technology and on the product side. And then it made scaling very, very efficient. Now, with Zero G, it's a little bit different because we have a high performance, essentially layer one. We've got a decentralized compute network. We've got a decentralized storage network. We have a service marketplace, which is kind of an app store, if you will, and then AI alignment nodes on top of that. And so it's a very kind of modular design where different customer sets can figure out what they need for their particular platform. You can use all of it or you can use a part of it. And so the regional focus is not as useful anymore. It's more a kind of psychographic focus, if you will. And so people in the West can use it, people in the East can use it, depending on the different types of use cases that they're looking for. And so it's been less of a geographic focus for us. And so we want to make sure that the key regions are represented from both a trading as well as a usage volume perspective for Zero G. So it's a different approach.
Got it. I understand. I think Brett's going to dive in a bit more on the product side in just a moment. Talking about more kind of global demand, though, one thing that is global is the money, I think, and there's been real demand on the investment side for Zero G. I think I don't know if I have all the details or all of the different raises, but there's the $35 million pre-seed from top investors like Alliance, Animoca, Delphi, and a few others, OKX Ventures as well. It was incredibly successful. I think maybe there was a seed round as well, and then the node sale on top of that. Do you want to speak to the strategy of just raising funds and why you thought your attempt to do that was so successful, and where you guys stand with that at the moment?
Yeah, within the Zero G ecosystem, there's a couple organizations at least. One is the Zero Gravity Labs entity, which is the core contributor to the network. That's what I'm the co-founder and CEO of. That entity has raised the pre-seed, which is 35 million, plus another seed of 40 million. And then there's the Zero G Foundation, which is more kind of like the governance and long-term kind of grant and investment entity, if you will. And that entity has conducted a successful note sale of more than 33 million, and also has a liquid token commitment of 250 million as well. So each one of the organizations needs to be capitalized differently. And the strategy around it was just to make sure that we have a high performance ecosystem over time.
Got it. Makes sense. And Legendary, I think, is going to dive into some of the tokenomics maybe a little bit later, because you revealed those not so long ago, which is pretty exciting. But Brett, maybe I'll come to you here. Brett's our technical expert, so he's going to get into some more of the product and what maybe the vision is.
Yeah, honestly, Michael did a little bit of the heavy lifting for me right there. But just to summarize, right, because Zero G is not your typical construction, and I think you probably have received some headwinds because of that, right? There's a user education journey that you have to have. So like, I'm just going to do a high level, and then maybe you can bridge the gap on anything that I didn't cover. So, just to summarize in ways that people might understand in the audience, right? It's an L1, it's EVM compatible, but the thing that you talked about earlier, right? It's modular, so it's not it's like the extreme modularity, right? Because we use modularity in this space where it's like, okay, Ethereum is modular because it's got a bunch of networks, but yours is modular even within your own network, kind of spinning up a bunch of different networks, or even use the word or the term networks and chains separately within your documentation, because it's not necessarily the same thing with how you guys are comprised. One thing that's interesting that I think is worth calling out is how you guys actually leverage Ethereum, right? So your own L1, but to the slashable stake of your validators actually is on Ethereum mainnet, and you use that to inherit some of the actual properties of Ethereum, and then go on to have your various networks, right? Your DA network, your storage, your compute networks, and then all of these other networks, and then the chains within the 0G network actually burn 0G to go back to the consensus network, which is where the validators are. Legendary will get into some of that, but two questions for you. One is there anything else outside of that like basic high level architecture that you would like to call out? And then two, how has that user education journey been, because you are so unique in this space when it comes to like your specific construction?
Yeah, the key thing to call out is and this is where the name zero gravity actually derives, or 0G, is this idea that eventually we want infrastructure to be completely invisible to the end user. So on the analogy that I use, if you're using Netflix, for example, today, you don't think about which AWS server to choose, or which encoding algorithm to use for the video, or which kind of payment methodology to use at the end of the day. You're as an end user, you just want to use the application and never have to worry about any outages and so on. So the infrastructure, the idea behind it is, how do we get something to be infinitely scalable? And how do we get something to remove any of the barriers to adoption from Web 2 to come over? Because if you come over from Web 2 and you're like, wait, why did my infrastructure costs rise by 10x? And why am I getting a ton of failed transactions? Then you don't want to switch. And so, or I'm forcing my users to use some type of wallet application that requires a bunch of seed pass phrases, and it's very difficult to use. And so the way we thought about our architecture and design is to remove all of these barriers so that there is no friction. There's a sense of weightlessness. There's a sense of zero gravity, essentially. So that was a bit of the design principle. And so the key thing for infinite scale, for example, is it happens at multiple levels. So the first thing that we did is basically say, okay, we've got a decentralized storage network that's high throughput for AI workloads. Because if we solve the AI workload issue, then we solve all other use cases as well. And so we built it and tested it. It's about 2 gigabytes per second in throughput, which I think is the fastest ever recorded for decentralized storage. So now you can actually use it for hot forms of storage. Then what we said is, okay, we've got this high performance storage network. We can actually then use it as a data availability layer as well. And because the key insight there is, well, what if we segment blob data into a data storage and into a data publishing lane? Because then you're removing the broadcast bottleneck across the entire network. Rather than sending blob data to 120 or 200 validators, however many you have on the network, at the same time, you just store it once, and then you send KZG commitments across the network, like very small bits of data, rather than these like really big chunks, essentially. And so then we're like, oh, this creates parallelizability. This creates more throughput, because every node you add to the network now adds to the overall data bandwidth. And so what we found is that the theoretical maximum for that is, for 5,000 nodes, we should be able to get to about 50 gigabytes per second in throughput. And that's already enough to start doing some small scale, fully on-chain training, essentially. But we didn't stop there, because if you look at modern data centers, it's not just 50 gigabytes per second, it's hundreds, maybe even a terabyte per second in throughput. So how do we then bridge that gap? Then we said, well, why don't we take a data sharding approach? And what we found there is that the consensus becomes the bottleneck. But what if you just can spin up an arbitrary number of consensus networks at the same time by utilizing, like eigenlayers restaking for economic security or other type of restaking platforms to do that? And then we're like, oh, okay, great. Now we can horizontally scale consensus networks. And then now you have infinite scale at the kind of data throughput layer. So then that became a key input to then scale also the execution layer. So we can, the way we're approaching execution layer is to then say, let's have a n number of kind of arbitrary chains that we can spin up, as long as there's kind of a master chain that keeps all of the different kind of transaction registers available. And so then in effect, you get like infinite TPS, quote unquote, through that. And so then we were able to scale the execution piece as well. And then the final piece is latency. How do you get below 100 milliseconds of latency on a layer 1 network with a 3-hop consensus? It seems impossible because speed of light, that's the fastest you can get to. But what if you do kind of localized consensus? Kind of what AWS does with like US West, US East, and then just make sure that there's global consensus over time. So we basically just went through, one by one to remove barriers to adoption. So that was the kind of key mindset.
That's interesting. So like that's actually it reminds me of the journey of even EigenLayer. You referenced them just a moment ago. Like EigenDA was their like key product that they were actually shooting for. They're like, well, what the hell? How do we secure this thing? And then that's actually how they came up with EigenLayer as a product to then backfill their EigenDA thing. Hearing you go through that thought process of you did one thing which led to the next thing, which led to the next thing, which led to the next thing. Just that product flow is really interesting. And just context for people in the crowd, like he's calling out gigs per second as like a bandwidth thing, like just especially in the data availability stuff. That's something I'm familiar with. Just relative numbers in the space. I think Celestia today is doing like 1.5 megabytes per second. EigenDA is probably the fastest DA layer we have today, and they're like 15 megabytes per second just for relative numbers. So if you're talking gigs per second and tens of gigs to hundreds of gigs per second, it's orders of magnitude bigger as an ambition. So that's actually really impressive. So before we drift too far, I noticed in the documentation you referenced largest chain for AI several times. So first of all, like, what does that mean? And then what is that unlock? Why is it unique for AI specifically? Is it these numbers? Is it something else? Can you expand on that?
Yeah, absolutely. So we've got more than 300 projects building on top of us. So that's kind of, we're trying to build the largest ecosystem around it. We have a very large community, getting close to 3 million wallets on the testnet, 500,000 smart contracts deployed, close to 400 million transactions and so on. So it's been super fun to build and see that traction. And it's really focused on use cases that have some association with AI. I mean, it could be, for example, a game that's using a non-playable character that's calling, let's say, our inference. That can be part of it, all the way to hardcore AI infrastructure like vector DBs building on top of our key value store on a decentralized storage network. So that's the kind of the spectrum infrastructure, consumer apps, and so on. That's building on our chain. So feeling really proud of being able to build that. And then specifically, AI use cases are quite important to us, because when we got started, ChatGPT was starting to gain a lot of traction, ChatGPT 3 at that point. And we basically fast forwarded 10 years into the future and thought, what does a world look like with a lot of automation in it? And essentially, you can start automating even what I call societal level use cases. So things like logistics systems, like running an airport, or manufacturing systems, or administrative and governance systems. And how comfortable would we feel as a society to have a closed AI or black box AI players manage these systems? For these societal level systems, wouldn't you want to know what went behind the models? Where the data came from, who labeled the data, like how the model was trained, what version of the model am I even getting, how's the agent behaving in production, who even owns the agent? If I create an agent today, do I know that I own it? No, it's in the terms and conditions. It's likely not owned by you. So all of these kind of key questions came up, and we said we have to build an alternative that's owned by kind of people that are participating in the network, that's owned by a community, so that we can make decisions that are more for abundance versus extracting value.
Yeah, you started leaning in towards some like specific products that you were liking as far as like concepts. Do you have any other specific ones that you're excited about? Like what pointed builders are you most excited about? Or what are you hoping is built on your chain? Like what's some of the ambitions for what you have being created?
Yeah, there's quite a bit being built. Some of the ones that we've highlighted recently are, for example, an AI-driven version of a DEX, where they're using AI algorithms to automatically rebalance the LP pools, for example. So that's super cool. And then likely in the future, they'll add some type of like prompting interface as well to make it super simple to do swaps or even more complex type of transactions. That's a product called Zero. There's other things that are coming that are really interesting, like on-chain kind of credit scores that utilize AI so that you can give kind of larger leverage loans if you've seen a good actor. But personally, the thing that I'm most excited about is utilizing the power of blockchains to actually align AI models as well. And to me, AI alignment doesn't just happen in production. It actually starts with the data itself. Like, where did you get the data from? How do you know this data wasn't poisoned? And a silly example I use there is if I'm wearing a Nike sweatshirt, so nothing against Nike, but let's say Nike approaches OpenAI and says, I'm going to pay you $10 billion so that you train your model in such a way that every time somebody asks something about sports, that Nike comes up. Feasible to happen. And the end user would just keep getting kind of some Nike messaging, and they're like, I guess Nike's like associated with all sports. But that's a bias introduced into the model, and it's a bias you may not even be conscious of. So how do we make sure that we know the types of biases that these underlying models and agents actually have? And so I think there's going to be a lot of fundamental research that we're going to be doing in that area.
Nice. So I'm going to throw out one idea and then just pass it on to Legendary because we're running low on time. So like, I actually heard a conversation around blockchain solving for the difference in inference costs, like the market price of an inference cost, right? Because you have several models, and if I have the same query to 3 different models, one of them may run for 5 minutes and one may run for 1 minute, right? That means the costs are actually different on the back end. So if you can actually spin up a market around the different inference costs and maybe pay upfront with like tokens on how much I'm willing to pay on a specific call, there might be some use case there. But all right, we're running low on time. I'm going to pass over to Legendary so that he can see a little bit what's going on with the forward look of Zero G.
Yeah, absolutely. Thank you. Look, you are building a very, very complex ecosystem, and we learned a bit about that in the interview. You're also building that in a very volatile environment. Like, a lot of people go so far to call it a president's market. Everyone is waiting to see, what is Trump saying? What is he posting? What is he saying at the conference? What's the next move there? And the whole market is trading this with extreme volatility. And on the other hand, you have quite a similar picture, I would say, in AI. There's new tools coming out every day. The attention span is a very short one. Every week we get excited about something new, whether that's Bolt, whether that's Manus, and the aficionados move on from tool to tool. So how do you deal with this, like, as a founder, with the volatility in both the market that's very volatile, but also in the attention span? Is that impacting you at all?
The attention span, not so much, because it's a kind of this idea of one-upmanship. One day, R1 comes out from DeepSeek, another day Quent comes out, and then attention shifts, as you mentioned, to Manus and so on. The key thing from our perspective is just to make sure that we support the latest frontier models that are open source. So as long as we do that through our inference and soon to be released fine-tuning capabilities on our network, then it's not as big of a deal, because what we're trying to fundamentally do is not build everything ourselves. We're not trying to rebuild an open AI, which ironically again is closed AI, but we are creating a one-stop shop experience utilizing all the best that Web3 and AI has to offer, like all the different types of builders in this space we want to bring together so that it is as easy of a user experience as doing a bunch of API calls on OpenAI. That's fundamentally our goal. So as long as we have a complete pulse on the market, what's happening, where it's moving, we support the best open source and Web3 AI projects, it's not too big of a challenge for us to kind of keep focusing on our long-term vision. As far as the volatility in the Web3 market, that's something we're not quite as worried about, because it's a very long-term journey to make AI a public good, which is our mission. That's not going to happen in one market cycle, for example. So we really have a build for the long-term type of perspective, and so not too shaken by short-term volatility. it impacts things more like a token generation event, maybe, but in the large scheme of things, from a pure technology and research-based kind of process and deliverables, it's like, for example, we can't solve decentralized training, in a couple months. Like, that's a research problem. That's a very long-term problem. And if we make, good headwinds this year, I'd be very happy on that. So not too worried about that either.
Yeah, you mentioned this long-term perspective, and you mentioned this like ultimate vision of the Netflix state, right? You're using an app, you're using an ecosystem, you don't really care, at least 90% of the users don't, about what's going on in the background. But you also mentioned you're building so many individual building blocks. There's the AI Launchpad, which we had talked about, the AI DEX, the on-chain credit scores. All of those things are happening. All of them are interesting, and we love to nerd about them in our bubble. So how long do you think will this transition or this journey take until we, quote unquote, like stop getting excited about the individual building blocks and we will transition into this Netflix state of just using a fully integrated, holistic AI ecosystem? Is it years? Is it a decade? Is it longer than a decade? What would your best guess be?
My expectation is a couple of years, I would say, because I would consider that 2 years as a catch-up phase. As I kind of hinted at, that fully on-chain training for LLMs just not possible today. Like, state of the art is about 10 billion parameter type of models. I think Prime Intellect released something where they trained between 2 data centers this 10 billion parameter model, fully decentralized. But what about a 400 billion parameter model? And by the time 2 years is over, we're likely at a trillion parameter model or more at this point. So how do we make sure that we have the infrastructure to support this kind of large-scale, state-of-the-art training, for example? Or even on the inference side, making sure that we can have very large-scale models that we can actually then run in a fully decentralized, verifiable, permissionless way. So 2 years of catch-up, and I think at that point we should have an environment where the end user doesn't have to worry too much about the infrastructure, and builders that are working with us can again use different components. So, for example, if you're building a very large scale and high throughput L2, and you just want to use, let's say, our data availability layer plus maybe some of our inference and fine tuning for the agents that are working on there, totally fine. We want to support all of these use cases.
I just got a quick one there, Michael. You mentioned all types of different builders who are working with you. Chains have taken different approaches when it comes to builders and to what extent people decide to support versus like maybe some help with marketing, or maybe just taking a whole bunch of builders and saying like these are maybe more officially sanctioned builders or officially approved. And we've seen a kind of varying success with both approaches. I don't think there's one specific approach that people know to be correct yet. How do you think about working with the builders and the apps that are building on top of you? What's your approach there?
We have 2 primary modalities. So we overall have a 88.8 million ecosystem program. And as part of that, we have 2 modalities right now. One is what we call the Guild on Zero G campaign, which is less the kind of lower touch, which somebody essentially applies through a form. They tell us, here's the application or the infrastructure that we want to build. And then we review it and then basically say, like, this sounds great. Let's give you some type of investment to have you off and running. And if you have any technical integration questions, let us know and we can provide some support. So more low touch, builder knows what they want to build. And then there's, on the other hand, the accelerator, which is 8 to 10 highly curated companies that want a lot of support from us on all aspects: go-to-market, fundraising, development, product market fit type of questions. And so that's a much, much higher touch aspect from us, where we bring our entire team from Zero G, as well as our partners like One Piece Labs and Moonhill Capital, to support these builders so that we can make them as successful as possible. In the first cohort, we had a number of companies that went quite far already. The one that was the furthest along was Carve, and they actually launched on centralized exchanges like Upbit and Bybit and so on. And when the market was still not trading sideways, they were valued at above $1 billion. So very proud of the team for being able to accomplish that. And we definitely want to support other builders on their path, but with a much more kind of high-touch experience.
That's interesting. So you're kind of taking a bit of a hybrid approach there. Interesting to note. Legendary, do you want to get into maybe some of the tokenomics and the token stuff? Where do you want to take this?
Yeah, absolutely. Look, I love talking about the long-term vision, the long-term focus. But as you said, the market side of things, if it impacts anything, then it's more the tokenomics and TGE considerations. And since you've recently did release, or the Zero G Foundation did release the tokenomics, I want to touch on some parts of that. It seems there's been a bit of a discussion on the timeline going on after this preliminary token distribution has been revised a bit, and the timeline has been focusing on the community bucket side of things. So just maybe quickly taking a step back for our audience to break down the tokenomics a bit more before I get into the question. There's a significant ecosystem growth allocation of 28%, almost half of that being unlocked to TGE. There's an AI alignment node bucket of 15%, with a third of that being unlocked to TGE. And then there's the revised 13% of the total allocation, which are being reserved for the community rewards, 20% of that being available at TGE, which is 2.6% then of the net supply. And the rest will then be distributed in seasons over 48 months. And I wanted to give you a chance to speak to the tokenomics and specifically to the thinking and the reasoning that went into those three different community allocation buckets.
Fundamentally, our thinking was that essentially community should deserve, first of all, the largest allocation. And so that's why you're seeing the community bucket being 56% versus the team advisors, contributors, kind of backers bucket at 44%. And oftentimes with major L1s, you actually end up seeing that the other bucket is significantly larger because maybe the investors alone have 35% and then the team is like 20% and so on. But for us, we were able to design it in such a way that there was a kind of community first mentality from that. So that was one design principle. And we were very cautious around how we fundraised as well from a lab entity standpoint. We wanted to make sure we had a highly distributed cap table so that no investor owns, for example, if it's a 20% allocation of one investor owns 10%, then all of a sudden you're starting to see a little bit more of a centralization on the cap table. So that was something that we didn't want as part of that. So then the next design principle was, one of the things we've observed is that there's a lot of, so to speak, farming where, testnet is really hot. People do all types of things to see if they can, farm some type of airdrop allocation. But for us, what was essential is more that kind of long-term support, because our perspective is long-term. We want to build a platform that solves for kind of major societal issues like aligning AI models. And so we took a long-term approach to that. And so the way we designed it is to say, okay, how do we create long-term holders that care about the network fundamentally? And so our decentralization mechanism primarily was the AI alignment node sale from that perspective, because we just fundamentally believe if you're an investor, if you're a holder of this long-term token, that you're going to create or make actions or support with a long-term perspective as well. So that's why you see a very large allocation for that, 15% for that kind of long-term perspective. And then the community rewards is more based around specific actions that different end users can take, whether they contribute in social campaigns or other type of kind of DApp campaigns and testnet campaigns and so on, where we want to make sure that they're also valued and rewarded for their contributions. But really the biggest bucket there from an unlock perspective was the alignment node holders because of that long-term perspective. Then the ecosystem growth perspective is used for things like the ecosystem program that I mentioned, the 88.8 million, to support initiatives like that long-term so that we can attract and work with the best builders in the AI meets Web3 space long-term.
Yeah, that makes a lot of sense to have this long-term incentive alignment. But we only have a couple of minutes left in the interview, but I want to have a quick follow-up question on the tokenomics that is on the community reward side of things. You said it, you're going to keep some for campaigns that will be activated in the future. It's the 48 months period that we'll see a seasonal distribution. Is there anything you can share on that? Will it mostly be campaigns? Will it follow, because it's a seasonally distributed, will it follow sort of a season logic? What can we expect from that, to the extent that you can comment on that?
Yeah, we haven't released specific details around that. And as we've kind of seen new things start popping up, for example, an NFT collection called One Gravity was built. So that was super fun. So we want to make sure that as these things kind of arise, that we have ways of kind of rewarding contributors to that. And the seasonal aspect, again, is the idea of making this kind of a long-term bet for people. So it's not just like, hey, I'm going to buy an NFT, I get the reward, and then, okay, I'm done. I'm going to just sell the NFT. But there should actually be useful ecosystem things that are unlocked by having that particular NFT. So that was the design principle around it. And the seasons, I think, we'll figure out over time. One of the things I've learned in graduate school is if you design something with very clear timelines versus having something that's more what's the word that I'm using for not off the cuff, but that happens on a non kind of aligned timeline, then there's a sense of excitement around it as well. So there's a kind of momentary excited happiness. So we need to make sure there's a long-term happiness and a kind of a momentary excited happiness. And so that was the design principle there too.
Yeah, I completely resonate with that. It's like even for any company, right? Like even for ourselves, we have like yearly, annual goals, but then we break things down into quarters, and then things change. Things change from quarter to quarter, especially when you're in such a volatile industry. And this end of this quarter has been completely different to maybe the end of the previous quarter. So big changes, and I appreciate that kind of requirement for some flexibility as you progress. But as Legendary said, we're kind of drawing to a conclusion here. Michael, just wanted to give you the chance. I think we've had a really interesting conversation. We've kind of touched on product, touched on history, touched on the vision, the funding, the objectives that you guys really want to achieve. Is there anything else that you'd like to share that maybe we've missed? Anything you'd like to call out, spotlight, just before we close out here?
No, just reiterating this idea that we have a very long-term focus around making AI a public good. And the type of world that we see is, well, with any new technology, you can have kind of two dimensions. One is abundance, the other is weaponizing that technology. And so we very much want to be on the abundance side, so that we can create a world where we potentially, as some of my professors say, we might not have to work for a living anymore, where we can truly choose, pursue our passions, and be kind of our holistic self, our best selves. And so, what does a world like that look like? And that's something that we're really excited about. And so any of the contributors to our network and users and so on, I want them to have a very long-term perspective, so that we can build this type of mission, this type of vision together in the space. And so we're really excited about kind of building for the long term.
Sounds very exciting. We joke, well, I don't think we joke often. We're being quite serious when we say one of the reasons, or one of the byproducts of creating so much content, is that we hope we have this humongous bank of content so that we can train the AI and create different versions of ourselves. So we don't have to necessarily be running the show every single day. Our very intelligent AI counterparts will be able to take over. So if you have any builders on your chain that are able to do that, we'd be delighted to hear.
Yeah, let's chat more about that. There's some approaches.
In the meantime, if people want to follow along on Michael's journey, his account is at michaelh_0g, showing it on the screen for the people who are watching in. And just a reminder, if you're new here, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour. We're live on X Video, YouTube, and Apple and Spotify podcast too. Thanks so much for joining us, Michael. Appreciate your time. Have a great day. Bye-bye.
Thanks for having me. Definitely worth getting up super early. It's like 4 a.m. my time zone. So it's been super fun.
Thanks, man. Have a great day, everyone. See you on Monday. Bye-bye.